If you look at the economy today, what are the biggest risks to the U.S. economy, and where does the threat of sanctions and trade wars play in that?
Well, let's talk short-term and long-term. Short-term, the only real risk to the U.S. economy is overheating, and that would be a surprisingly strong surge of inflation, which is probably unlikely. I mean, we have core CPI, which is behaving pretty well. And you have food and energy prices, which have jumped a bit. And there are anecdotally a lot of discussion around tight labor conditions, and that should lead to wage inflation, but we haven't seen too much of it yet. That would be one factor to keep an eye on. Medium, longer term, there are some real issues in the U.S. that I think we have to keep our eye on. If you sort of think about the success of the U.S., really post-war, maybe even for the last 100 years, there are kind of three pillars to three legs to the stool. The first has been demographics. The second has been soft power, and the third has been rule of law. And when you think about the U.S., demographics has been one of its great strengths. We have a reasonable birth rate, but immigration has been a big contributor to the success of the U.S. in terms of a growing economy. And when you think about long-term economic growth, it's simply population growth and productivity improvements. And with an aging population, which the U.S. unfortunately has, but not nearly the issue that is faced by Europe or even China and Japan, immigration is going to be an important contributor to future growth, and that's something we have to keep an eye on. And I think right now the policies are probably anti-immigration, and there's a good debate to have about what is the right policy around immigration, who should be admitted, how one should go thinking about that, but it's something that's been a real key to U.S. growth in the past. When you look at the second pillar of U.S. strength over the last period of time, it really comes down to soft power. And soft power is the ability to have influence without actually having to exercise power. And that comes through diplomacy. But probably the greatest demonstration of soft power is the fact that the U.S. has the reserve currency of the world. And that's not going away overnight. But to the extent that we have a unilateral foreign policy and a unilateral trade policy, we're sort of tempting the world to find an alternative to kind of clear and use something other than the US dollar. That's not practical today. It's not going to happen in all likelihood with euros. It's not quite yet. The Chinese currency is not quite ready for that yet. But there's enough technology out in the world today with cryptocurrency and changes going on that you can imagine if you let your mind wander a little bit, that something becomes an alternative in the future. And we shouldn't be tempting fate like that because it's such an important contributor to U.S. success. And then the third has really been rule of law, which I think has held up reasonably well over the course of the last year. But again, that's something which has been at the core of U.S. success, is the ability to be certain when you enter into a contract, when you're making decisions, that you have real property enforcement rights, and that in the end you can predict what's going to happen.
Do you believe these risks, especially the risk as U.S. as a soft power, right, the reserve currency risk, do you think these risks are priced into the market today?
No, they're like geopolitical risks. The market has a very difficult time assessing risks with low probabilities, and rightfully so. It's very hard to figure that out. But this is something which, you just sort of look at it and you say, this is one of the great strengths of the U.S. economy, and it's something that is probably as important as any factor to the success of the U.S. has been over this long period of time. And we're tempting fate by some of our policies right now.
If there is not a risk that's priced into the market right now, what would that be in the near term?
Other risks. I think the other one we have to keep an eye on is the deficits. This is something which people talk about all the time, and again, you can have a debate about ranges, where it becomes important, where it's not important. But the fact is we're probably going to go into the 2020 elections with a budget deficit to GDP of somewhere around 4.5%, or about $1 trillion. And we're going to be looking at debt to GDP numbers of somewhere around 80% or so. And by 2020, 2021, 2022, this is going to be probably towards the end. This is already near a record recovery or expansion, and we're probably going to be nearing the end of it. And at a period of time where interest rates are probably going to be a bit higher, and we have a lot of refundings to do. And I just think that's something that people have to keep their eye on.